is here, Director at Ajmera Realty, to talk more about the numbers. Dhaval, afternoon. Thank you so much for your time. Your sales have picked up quite nicely this quarter on a sequential basis, despite of being a relatively seasonally weak quarter. Tell us what went by, and do you see the momentum sustain? Are you on track to the numbers you've given to the street last couple of weeks?
So, the real estate momentum is looking good. As we've been witnessing that whenever we have project launches, so this time we had two project contributors, I would say. One is from Bangalore, Ajmera Lugano and Florenza, two projects there, and one in Bombay, Ajmera Eden. So these were the prime contributors for our sales velocity. And we launched Ajmera Eden, where we saw just on the month of launch, about 14-15% of the inventory sold out. And of the overall inventory of 225 crores, which we did this year, about 31 to 32% came from Bangalore project. So, we are seeing sales velocity coming in from different projects as in how we launch. So that's where the momentum is going. And with the year going ahead, we have another 3 to 4 projects coming up, which will take our projects and the estimates to be where we want to achieve. So hopefully we should continue with this trend.
Well, just a follow up there. You said you did around 225 crores so far in this year, but if I have it right, your full year guidance was around 2,000 crore rupees. Now, given the slew of launches which are lined up, you're confident about that?
So we have 2,000 crores of total project launches. So it's not that this year we'll be having 2,000 crores. When we launch projects this year, which will be in the tune of 2,000 crores. So obviously these will demonstrate or commensurate over the next 2 to 3 years time as in how it comes. But overall, the GDV of those projects around 2,000 crores.
It's around 2,000 crore, but what could be the bookings in this year? And in terms of the revenue as well, what kind of numbers should we expect on the P&L?
So we are, looking at least last year we did about 800 odd crores in our revenues, and we are expecting at least 20 to 30% hike coming in this year from our sales. And obviously, subsequently in the same lines, we are expecting in our PAT and PAT margins.
Well, two things. How is the pricing moving in the ticket categories you are operating in? One. And also, what's the inventory you're standing on right now? Because I believe that current standing inventory has become much more valuable. The current stock and versus work in progress, which will hit the market sometime later.
So, the price range, we operate in different segments with mid luxury to luxury and affordable and mid affordable as well. Every city has a different segmentation. So if I look at Bangalore, our range is around between 75 to 80 lakhs. If I look at Bombay, like the Vadala project is 2.5, 3 crores plus. So it's all different. Obviously, there's another project in Greenfinity, which is about 1 crore plus. So that continues in different areas. But if you look at our ready to move in stock, which is almost negligible, which we have, but our work in progress inventories, which are near to be ready, which are also almost like our Sikova project and Greenfinity, which is about 80% to 90% plus sold out. So we are witnessing as and when we are coming to near completion, we are seeing almost sold out projects coming out. So it's a sustained market where we see a great momentum during launch, which we witness in our Manhattan project. And with a sustained sales coming up in every project. So hopefully by the time the project is getting complete, we are almost 80 to 90% plus sold.
Just Dhaval, a quick last question from my end. We do understand that you're looking at venturing into new micro markets in the second half of the year. Which are the areas you're currently evaluating, and is this a part of that 2,000 crore GDV that you talked about?
No, these are not parts. So these are all in the different segments. I do not want to divulge much details because we are in very active and advanced stages, but it is more in Western. Some are in Western, some are in central parts of Mumbai. These are not part of what we've actually announced. These are over and above what will happen.
What's the plan here? Is it sort of redevelopment, or could you just give us some details in terms of what's
it's a redevelopment, it's a slum redevelopment, and it's an acquisition. So these are all different projects.
Do it standalone?
Sorry?
It'll be in a JV, or you're going to do it standalone?
Some in JV, some in standalone.
Fair enough. And in terms of the capital, I'm guessing you are not too worried about it. The balance sheet is strong enough, below 1x in terms of net debt to equity?
Yeah, so we are not too worried on the capital infusion. We are looking at asset-light models where obviously we have more projects coming in with less amount of investments, but more projects coming out. So that's where we are strategically moving ahead and successfully trying to get few projects in those lines.
Okay, Dhaval, on that note, we'll let you go. Would have loved to hear more on those, micro markets, but probably that's a discussion for another time. But thank you so much for making time and speaking with us today. Time now for